These limits can range from a couple of $100,000 to several $1 million, a level of funding that is often unattainable through personal credit, regardless of how stellar your personal credit may be. It's worth noting that many successful billionaires leverage other people's money, whether it's credit or investments, to expand their net worth, grow their businesses, and enhance their wealth. Hi there. In this video, our goal is to provide you with a comprehensive understanding of business credit and how to distinguish it from personal credit. Business credit is often considered a hidden gem within the lending industry, and it's crucial for you to grasp the key distinctions between personal and business credit. By doing so, you'll gain insight into the necessity of undergoing this process and adhering to its steps, enabling you to establish and leverage your business credit to enjoy its benefits. Let's begin by discussing what business credit is. Business credit is a form of credit established in the name of a business entity. When most people think about credit, they typically associate it with their individual credit score, regardless of whether they own a business or not. However, what we're focusing on here is the credit established in the name of your business or your prospective business entity. When you build business credit, your business cultivates its own credit score and credit profile, which are maintained separately through designated credit bureaus, as we'll dive into shortly. Once this business credit profile is established and a solid business credit score is achieved, your business becomes eligible for various forms of funding and credit. This process is a significant step toward achieving financial success and becoming a millionaire. Much like how individuals can qualify for funding, mortgages, car loans, and credit cards based on their personal credit scores. In essence, your business follows a similar path in building its credit worthiness. Your business operates as a distinct entity, and by following this process, you can establish a separate credit score specifically for your business. This means you can secure funding for your business without it being tied to your personal Social Security number. Instead, you can obtain financing using your business EIN number, eliminating the need for a personal guarantee. The credit and funding decisions are primarily based on your business's financial capacity to repay, rather than your personal financial situation as the owner. This is a particularly impactful concept because every month, tens of thousands of individuals experience the unfortunate scenario where their personal assets are jeopardized. Their bank accounts are frozen due to default on personal loans, mortgages, or credit card debts. Legal judgments are issued against them, all stemming from the use of personal credit. In contrast, business credit obligations are tied solely to the business entity, not your personal name. Therefore, in the worst case scenario, which we hope to avoid, you can safeguard yourself, your family, your livelihood, and your other assets. You won't make a mistake or financial obligation like a mortgage or credit card payment to negatively affect everyone else in your family or tarnish your personal credit standing. However, Building credit, business credit, brings about a completely different set of consequences, or rather, lack thereof. To illustrate the distinction, let's conduct a brief comparison. Many individuals aren't fully aware of the significant disparity between business credit and personal credit. When it comes to personal credit, you can utilize applications like creditkarma.com, among others, to monitor your personal credit score. There are three primary credit bureaus responsible for managing personal credit scores: TransUnion, Equifax, and Experian. Ideally, for personal credit, you aim for a score above 700. Achieving a good personal score opens doors to favorable interest rates, sometimes even 0% financing for up to 3 years, which we'll discuss in details in our section on improving personal credit. Maintaining a score above 700 means you'll pay significantly less in interest. This score also grants you access to various credit cards with better terms and more extended repayment schedules. All of these records are associated with your personal name. These credit bureaus, also known as consumer reporting agencies, CRAs, evaluate your profile and assign a credit score ranging from 360 to 850. Naturally, a higher score indicates greater eligibility for various financing options. Under personal credit, these three bureaus track and compile information related to trade lines, credit cards, mortgages, student loans, and other credit-related activities. Your personal credit score takes into account factors like the age of your credit and credit utilization, which refers to how much of your available credit you are using. For instance, if you qualify for a credit limit of $100,000, are you using only 30% of it, or have you utilized the entire amount? These are the variables that influence your personal credit score. As a result, the landscape of business credit involves three bureaus that closely resemble their counterparts in personal credit, but they go by different names: Experian Business, Equifax Business, and Dunn Bradstreet. In the realm of business credit, Dunn Bradstreet stands out as the primary business credit reporting agency. Establishing a strong credit score with Dunn Bradstreet is a crucial objective, which we will dive into in future videos. I want to introduce you to these distinct bureaus and their terminology so that you can navigate this video content effortlessly. It's essential to understand that when it comes to business credit, the criteria and considerations are entirely distinct from those of personal credit. We'll explore these differences in greater detail later on. Now, it's crucial for you to grasp why building business credit holds immense importance. If your objective is to secure credit for your business that remains entirely separate from your personal Social Security number, then building business credit is an absolute necessity. Furthermore, if you aspire to assess business credit within the burden of a personal guarantee or personal liability, along with the ability to distinguish between your consumer and commercial credit limits, then dedicating efforts to establish business credit is paramount. I'm emphasizing this point because one of the critical challenges people face in following a systematic approach is maintaining consistency. Many individuals embark on endeavors but struggle to see them through to completion. It's vital for you to comprehend the reasons behind pursuing business credit and to execute the steps correctly. Once your business credit is established, it will yield substantial dividends in the medium and long range, and you may even witness short-term benefits. This process provides insights into how fundable your business is, regardless of whether you already have an established business or are just starting out. The key is to understand the purpose behind this journey and why it holds such significance. It's essential to understand that many individuals face significant financial hardships because they solely rely on their personal credit. If your personal credit is in poor shape, your opportunities to access capital, tap into other people's money, and leverage those resources for that financial growth become severely limited. This lack of options can be quite detrimental. That's precisely why this process is of the utmost importance. It provides you and your family with the chance to establish a thriving business, create a lasting legacy, and secure access to capital independence of your personal credit. Maintaining strong personal credit is undeniably important, but when you continually seek additional funding through personal credit, it can have adverse effects. Each time you apply for personal credit, your personal credit score takes a hit due to inquiries, resulting in a loss of several points. This is because you're actively seeking credit. However, in the realm of business credit, the dynamics are quite different. The criteria and conditions that aid in building and sustaining business credit differ significantly. This is why it's crucial to follow the forthcoming videos on credit, as they will guide you toward higher credit limits. These limits can range from a couple of $100,000 to several $1,000,000, a level of funding that is often unobtainable through personal credit, regardless of how stellar your personal credit may be. It's worth noting that many successful billionaires leverage other people's money, whether it's credit or investment, to expand their net worth, grow their businesses, and enhance their wealth. You don't want to obstruct your access to these opportunities. With consumer credit alone, you won't gain access to the substantial credit limits available in the realm of business credit. In this video, I aim to clarify the distinction between personal credit and business credit. In the next video, part 3, we'll debunk some of the most commonly accepted myths surrounding the acquisition of funding based on business credit. I look forward to sharing more insights with you in the next installment.